Boom, we are a live bear family. Thanks for joining us today. We're going to be taking a look at our favorite crypto assets as well as stonks, gold, and just some general areas of the market. Currently, though, we're just going to dive right in and take a look at Bitcoin. This is the 6-hour chart that we're watching here. I'm going to actually get rid of the bear claw just to clear up some of the data at the moment. We'll add it back. Now, we are currently in the peak areas of the oscillators. So I'll point this out by making them much bigger. This is the stochastic RSI. We started to turn down. We're already below the 80 point, which is usually mean we're going to turn down, and probably for the next 6 hours. Once we cross over the 50 and then back down to the 0, we'll be more excited about a potential test. So across the board right now for Bitcoin, all the oscillators are in that oversold area. Same here with Bitcoin, just the general RSI. We see a little bit of divergence. Again, higher prices moving up, but lower RSI compared to the price itself. So I suspect for the next 6 hours, we're going to go down and we're going to find out how this test looks. Now, what that means. One of two things is going to happen. Markets are great that way. You either have up or downside. We're probably going to roll back down to test 60,000. If you look on some of the data, which I'll share here shortly, there's potential selling pressure coming into the markets. But when you see the RSI oversold with bearish divergence and the stochastic RSI turning down, there's also a few other indicators that have given us that data as well. So here's the MACD. The MACD is currently aiming to cross over to the downside. It's above the 0 line, but I suspect we're going to come down and try to retest that 0 line. If we don't break below the 0 line and move up, this will also be a bullish indicator. But one of the ones I'm most interested in is the bear claw, our exponential moving averages, which are stacked on top of one another. We've already started that downside since the oscillators reset. I just woke up, it's 8 p.m. My times are still all messed up from traveling. But again, I do suspect we come back down to 60,000, which should reset all of the oscillators. So this is a really important moment. If we break through, try to come back up and cannot close above the slow moving averages again next time, it probably is not a great scenario. So we're in really critical territory here right now. Again, everything else was leading bullish, but we are very high up in the markets again still for many things. NVIDIA should not be 11% of the GDP of the United States. It's just insanity. So there's like just an easy argument that that's wrong, that we are in very much so part of the hype cycle. So I think that we're going to go down to 60, test that, and that's going to turn into our test before we effectively move back up. If we break through this again, we'll readjust, but it moves to the downside. But again, remember, leading up to this moment, all the indicators are bullish, right? So until the trend shifts and stays to the downside, it's better just to remain in the trend that got us here in the first place, which is bullish. Although again, that's why defensive profit taking can be so valuable. When you're up 10x, like we were in Fetch or Solana, it just makes sense to take a big chunk of profits. There's not really anything better than that. I know I think I saw comments in the YouTube section around people be like, Fetch is going to $15. It's like, whoa, guys, we're already up from 30 cents to like $2. Calm yourself. Nonetheless, if we stay stuck below the slow moving averages here, can't get back above, it's likely that we see an LPSY and we come down lower. But for now, again, we just lead with the bullish indicator. There are a few other things that bring us to that sentiment as well. Number one being the liquidation heat map here from CoinGlass. It's probably easier for us to go wipe out that $72,000, $20 billion in shorts than it would be for us to get down to the $30,000 in longs to wipe out. So I think that's important. It's probably easier to wipe out all those shorts at the $72,000 mark, and then the market can decide from there. It could become bearish at that point. I wouldn't be bullish at the top of the market trading range there either, unless you have really sharp stop losses effectively. So It makes more sense to me that it's going to try to wipe out that short first, just because it's not very far away, and $20 billion in shorts is not an insignificant amount of money holding the market down. And also, just in general, the market tries to get rid of long and short positions because of how they operate within the market sphere. The other thing, that there's been a fairly significant amount of inflows, mostly inflows, nowhere near what was driving us all the way back here in March, clearly. Just it's obviously not the same, but that's to be expected. You know, I think there's a lot of like hype in the market, as you can see back here, huge amounts of inflows through IBIT, Fidelity. Here it's pretty stagnant. There's a lot of uncertainty in the market still. We're not seeing that general upside that we would hope to see from the market. And then just another quick look here. Where is it? I have to load it up and bring it back. But for now, again, down to $60,000, retest that, and probably move up. Again, we could see distribution here for something that looks like this too. So don't count that out, that we try to wipe out the $72,000 in shorts before we actually go all the way down to 40,000, if that were the case. But again, remembering that the bullish trend is probably still intact to some degree, so that we see a test here of some kind, move up, see an SOS and backup phase, and then do something like this before moving to the finality of the bull market. Again, remember that leading up to the trend here, we can just probably remain bullish to some degree, but that trend in other assets did disintegrate. So moving on to the S&P 500, we saw a big down day for the S&P 500 today while I was asleep, which I don't know how that happened, but the asleep part, I know how the market went down. People were selling. The other important part here to notice is that selling is actually more significant at this point than any of the buying or demand. So very limited demand in this place. This looks like a distributional trading range to me. I suspect we see a bounce. If we can't get back above, we'll close and come down. That would be also bearish for Bitcoin. So we're at a very critical point right now. This is not a point to be making any over leveraged position moves. For Bitcoin, you can just dollar cost average, but there's lots of reason to believe, again, that because we're so high up in the market, and we've been here for quite some time, you can lean into the idea that we should be headed to the downside. We haven't tested any of the slow moving averages on the daily here, and usually we get a test back down to the 200-day moving average in any general healthy market cycle. There's also the 21-day moving average is also a really nice test, but if I continue to draw the 200-day moving average up here, that could put us all the way back down to 520 points or 5,200, depending on which S&P index you're looking at. I'm looking at the ETF trust, so it's the numbers are a little off. They remove 10 here. Unimportant data, but nonetheless, there you go. So we're up very high for the stock market. Again, we're just leading with the bullish sentiment, most likely. Silver here appears to be in a backup phase. I think as well, we went over that in yesterday's video, that we've had a long-term reaccumulation range here, which with what appears to be a spring, some nice tests right at the bottom of the range and the breakout into the SOS. So the fact that these commodities are looking very bullish, I think is probably the one to lead into. I think the housing market is going to collapse, but I don't think the stock market is going to collapse. I just don't think that they want to get rid of the ownership of all of the business assets. Business assets are very valuable. If we're correct about our deflationary thesis due to excess deaths, homes are only going to get cheaper because there's potentially so much less demand behind those actual properties that people would want. There's a high amount of liability with owning a property too, and we're at the top of the market, so there's just not a whole lot of buying going on. I think that the floor will probably fall out on real estate while continuing to rise for assets like gold, silver, and many of the functioning businesses. What do they say? You will own nothing and be happy. Well, so who's going to own everything? The more expensive the stock market gets, the less likely average retail is going to own it. They're not in this market. Retail is not here. Retail even may just be dead for all we know. So again, I think that right now gold and silver are kind of a strong indicator that we're going to be in a bull market for assets for a while, due to that accumulation process by these bigger natural or unnatural forces, however you want to look at it. But for now, at least on the 6 hour, I want to see a total reset of the stochastic RSI before I get excited about anything. We are just on gold right now, headed to the downside. As soon as we cross over this middle line and continue down further, I think this will be an important area to keep an eye on. If we can totally reset the stochastic RSI and the RSI without, and this is the important one, without going below this trading range, I think things are going to work out really well. I think that this is going to end up being a backup phase for gold. Now, could it be distribution and a breakdown? Of course, but I just don't see how that happens. Assets are more valuable than dollars. All of this is based off dollar denominations. It's likely that they're going to start printing more money somewhere in the near future. They're lowering of rates, not necessarily as bullish as people think, but printing money is super fucking bullish because it just means the inflation of asset prices, which is really the only reason we are up this high in the market to begin with. So just a quick look at our few final assets for the day here before I jump off. I don't want to make this video too long. Here we can see Solana. Again, what I'm looking for is a reset of the volatility oscillators like the stochastic RSI. Again, we are peaked out. Usually here in the 6 hour, we do not stay up this high for this long when the stochastic RSI has peaked out and turned down. But again, it may not always come back down to the zero line either, and this will be a key point to watch. So for instance, if we come all the way down and can't get below the 55 point and we try a few times, we're probably going to blow up to the upside really quickly. But what I would like to see is just a nice, clean, clear reset of the stochastic RSI for Solana and many of the other assets here on the 6 hour to verify the test position, which would mean, again, that this is a reaccumulation trading range. This is looking a little dirty here, ladies and gentlemen. Get rid of some of this stuff. There we go. That this would be a reaccumulation range. You could even see it as somewhat as a double bottom within the reaccumulation. But for now, until those oscillators reset, I'm not going to get excited about anything because it could just be more downside. It's not particularly clear to me yet. Again, remember how I led into this is that we're up really high already, but there was a very long accumulation process to get here. So 500 days of accumulation for Solana, followed by 160, 200 days of bullish momentum. It usually works out to something similar of the length of the market cycle itself, so about 465 days. So again, the idea that we potentially go up for one last peak out, maybe somewhere around here, maybe higher, doesn't really matter, before a full market reset and into bearish territory for a long extended period of time. But again, generally over the past, what I've seen is that if you have a 520-day accumulation cycle, you have a very strong bull market for the first half of that, you have accumulation that moves us through the second half, and then the finality of the bull market itself is a very short-lived period of only like 90 days where the hype just becomes endless. You can basically buy day in, day out of any asset that you can get your hand on, and that's when retail most likely shows up like, oh my God, I've just been buying every day. They start to tell other friends, like, I've been buying Bitcoin, I'm up and everything's up, it's all going up, like you're just gonna you gotta get in the market right now. And that's usually about the end of it. But there were some clear warning signs for this drop. Again, all the celebrity meme coins, just the meme coin mania in general, those are usually signs of like an overheated market cycle. So nonetheless, a little bit shorter of a video today. I just wanted to keep you guys updated, kind of a step-by-step process. But again, for now, with where these assets are at, I think that let's stay in the bullish trend until we see it, until for sure we see it shift. We've definitely seen an increase of volatility to the downside for many of these assets, but the time cycle itself has not finished, I don't think. So it's likely that we move into some type of reaccumulation here just before the finality of the bull market. Anyways, this is T with the Arcane Bear. Thank you guys all for joining. Remember to like and subscribe, please. I would really appreciate that if you could help me out with this one right now. And then, yeah. And by the way, I read many of your comments. I didn't get a chance to answer them because I've just been busy here. And there's some very heartfelt comments about how maybe I've helped you through your journey, or some of my ups and downs have helped you as well. And I really appreciate that, guys. It was very nice to read. There was one message that even like brought a tear to my eye, just because, I don't always know what's going on the other side of the camera. And even though it's only a few thousand people that listen, that's still a ton of people. going through their individual lives. So I'm just very grateful for the heartfelt messages you guys all sent asking about what I should do to change the content. Most of you said nothing, which wasn't helpful. Like, you're doing great. Nobody likes you because you're too smart, which is fair. I can see how that might work. But anyways, just wanted to point that out because I hadn't got a chance to respond to your guys' beautiful and heartfelt comments. So it's T with the Arcane Bear. We're signing off.